Hello, everyone, and happy Tuesday. We are coming off a crazy week here in Texas, and I did not do my normal Mortgage Tip Tuesday last week because I had no power. So I wanted to come back and wish that you and your family are all safe and that your home is safe. And if things went wrong, hopefully that they are or know that they are fixable in due time. My Mortgage Tip Tuesday is a little bit in regards to understanding your loan estimate. There are times that a borrower will shop around or come to me after shopping around, and basically what they're sold on is interest rate. And so the biggest thing that I always talk about is a client can call and you can tell them, you can get them whatever rate that what they want to hear. But the important thing is, what does the lender put on paper? And so that's what I wanted to talk a little bit about, because it is important to understand in this environment right now, with low interest rates and lenders' prices are different than everyone else. Just an experience that I just went through with a borrower who shopped around with a very popular, known lender. I feel, in my experience, was misguided. I feel that they were lied to, and I also feel that they were overcharged, and only because I can compare it to what we were offering them. So I'm not about talking about another lender, so I won't mention their name, but I do want you to understand specific parts of your loan estimate. So I am going to share my screen here really quickly to protect the borrower who sent this to me as well, so none of their information will be shown, but as well to make sure that you all can also see what to look for. So when you are doing a loan, lenders will send you a loan estimate, okay? And the front page typically will have your interest rate right here, your loan amount, and then it will go into whether this loan has any prepayment penalties, balloon payments, anything of that sort. And then your principal and interest, mortgage insurance, your estimated escrow, and then your estimated total payment. So it will always say estimated total payment here because your taxes and your insurance can fluctuate throughout the life of your loan, okay? When you come down to the bottom, it will tell you what your actual closing costs are right here, and then it will tell you what your cash to close is as well. So it'll say from, or it'll say to borrow. So if it says from, this is the amount of money that you can expect to bring to closing. So let me move forward some more. Now, lender charges, this is the main thing right here. So just to explain really quickly what a buy down is. So you have par interest rates, which are where rates start, which means you don't owe the lender anything to get that interest rate, as well as you are not paying for that interest rate. But in this competitive market, for lenders just to get you to sign on the dotted line, they're telling you, I can get you that rate. But when it comes down to being on paper, you need to look at letter A, which is origination charges. Those are the charges that the lender is, one, charging you for that interest rate, as well as the lender fees. This is the only thing I'm really going to go over here. So if you notice right here, it says 3.375% of loan amount points. So in order to get this great 2.25% interest rate, the lender is charging you, the borrower, $9,815 to get that interest rate. So you may shop with another lender and that lender will say, here's your rate of 2.75. And you're thinking, wow, but another lender offered me 2.25. Why is your rate so high, right? Because that's what we hear. But in actuality, at 2.75, possibly, just throwing this out there hypothetically, there wasn't a charge for that rate. So the loan officer really did offer you an interest rate that was the par rate without charging you. How I typically try to do my loans, one, I would probably never offer a borrower a rate with a discount point of 3.375 unless the borrower specifically told me they want to buy down as much as possible. Typically, I show 1% below par, and then I show you par, and then I show you a no closing cost option so that you're able to see all three scenarios and make the best decision for you and your family. I think it's very, very important for borrowers to truly understand their loan estimate. And if you don't understand it, then I believe that you need to speak with someone who does understand it so that you can put your family in the best possible situation, knowing what you're signing when you get ready to close. As always, it's your girl, #JLoan. It's another Tuesday, another tip, and I'm hoping that I can help you or someone you know in the near future. Look forward to helping you soon. Bye-bye.